Hi, this is Zach May with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 20th of November. Starting off with the FTSE 100, which is stuck just underneath the 50-day moving average there of 75.10. We were looking for an end-of-day close above that to hit the top of the falling trend channel from back in February at 76.60. Hopefully as soon as the end of next month. Now, obviously, we do break through that. It could actually happen much quicker than that, but maybe the last 10 days of November is a bit too quick to call the market up to 76.60. Back below 7400, which is recent support, then we're looking at 7300, an uptrend line there from back in March. The RSI just above neutral 50 at 53, so that is giving us a half full rather than half empty signal on the UK market. Moving on to the DAX, and here you can see that still trying to break out of that falling May trend channel. We've got the top of that broken at 15,700. Above that, we're looking for a retest of the highs of the year by the end of this year, around 16,500. Best case scenario is up to 16,800, which is the top of a broadening triangle from back in May. On the downside, not expecting much sustained price action back below the 200-day line at 15,600. Next up is the Dow, which is looking well poised as well. Here we had the bear trap reversal from below the initial October support, 32,800. We've had three gaps up higher since then, so a very strong market. Above 35,000, looking for the market to head up to the top of that rising trend channel from October last year at 36,000 by the end of this year. Not expecting much price action back below the 34,500 area. Maybe the floor of the gap there, the last gap, 34,400, the maximum on the downside, which is expected. Moving on to Bitcoin, which is slowly making its way up to the target we set for the end of this month, 43,000, which looks slightly ambitious now, given that we're running out of time. But 43,000 the target here near term. While we're above the initial October resistance at 35,000, we've tested that as new support in the middle of this month, or just a week or so ago, so looking pretty good still there. If you're fussy, you'd wait for an end-of-day close through 38,000 before assuming 43,000 is imminent for that market. On to the Great British Pound, which is looking rather greater than it has done for quite a while. We've broken through via a bull flag, V-shaped bull flag, through a rising 50-day moving, 200-day moving average rather at 124.40. Above that, looking for 127.30 over the next 2 to 4 weeks. Support for this market, obviously initially 123.80, but the 50-day line there just curling up now, so 122.60 there, and that suggests that we could be in the run-up to a golden cross by the end of this year. But 127.30 the upside at the moment, while we're on the right side of 123.80. Also worth looking at are the commodities. First is gold, where we bounced off the 50-day line, bear trap from below the 200-day moving average and above that 200-day line at 1952. Looking for that May resistance line projection at 2058 as soon as the end of next month. But the 50-day line needs to hold there around 1937. The surprise mover maybe of the recent past has been crude oil. Surprise on the downside with a horrible looking head and shoulders pattern there, and then a final little rally to kick out the bears. Neckline support broken there, the red line there at $75, and below $75 looking for a mild uptrend line there from back in May at $68 to be hit perhaps as soon as the end of this year, and if we're really unfortunate, by the end of this month. Moving on to the stocks. First one is Bushveld, and here the idea that we were in recovery mode looks to be right. We've got the 50-day line now starting to curl up as well. We hit our initial target there around 2.25. Above that, we're looking for 3.25 by the end of that next month. Support ideally stays on the right side of 2 pence, which is today's support area. Moving on to Cloudbreak, which has had quite a rocky ride in the recent past, but Looks like the shares are just trying to rehabilitate themselves. That 50-day line seems to be coming into support at 0.43 above that initial target, 0.66 by the end of next month. Best case scenario target up to 0.9 sometime early in the new year. And we've got an uptrend line there in the RSI window. Corcel also looking quite solid at the moment. We've got a rising trend channel there from back in May. Rising 50-day line. Floor of that channel around 0.44. Above that, we're looking for as high as 0.75 by the end of the year, by the end of December, on the basis that we're probably overdue with that kind of spike that we had back in September and one we had at the beginning of this month. On to Conroy, where the shares are making decent progress through the rising 200-day moving average, rather 15.2 pence above that, looking for 19 or 20 pence by the end of this month. We've also got the 50-day line rising, so we're in the potential run up to a golden cross, and so that really could change the whole look for Conroy over the next month or two. Moving on to a stock which hasn't covered itself in glory today. Helium 1, which is now looks like it's trying to head back to all-time lows. Shares down 35% basically. Gap down after 2 or 3 attempts to get through the 200-day line around 6.5 pence. Obviously that 6 pence area quite crucial because that was the last placing price. What we want to see now, if we're in recovery mode at all, would be for an end-of-day close today back above the October support there, around 3.95 pence. Otherwise, we could be heading back down to 2 or even 2 to 3 pence before the shares turn around. Onto a stock which is in a rather better place, and that's IMC. Here we've got a rising trend channel, a wide one there from June, top of the channel there. The guess is it's heading for 2.2 pence by the end of next month. Obviously, it depends exactly where that channel top is, but that looks like the right guesstimate there, 2.2 pence for the end of next month, while we're above the 1.2 pence area and the floor of that rising trend channel. Lunglife is next. I haven't looked at this for quite a while. Here you can see that the shares just breaking up within a rising trend channel, another wide one from April. Shares could be heading as high as £1.80 over the next couple of months, especially if we can hold above recent support around the 80 pence area. Probably the end of January would be a potential target there, or time frame there, and we're hoping for a move the type of move that we saw back in July, August to happen in December, January. On to Mkango, which has had positive coverage here and looks like it's listing as well above the 200-day line, looking for 13 pence, which was basically post-spring resistance above 13, potentially up to as high as 19, which is the top of a broadening triangle from this time last year. But the key here, we stay above that 200-day moving average. MusicMagic is next, and if you forgot what the stock was, here we've hit the top of a rising trend channel from June. The chart here looking rather similar to the one of Myriad, but want to see an end-of-day close back above 26 pence, today's intraday high, to give us a potential target of 38 pence by the end of next month. Obviously a gap higher, very strong signal, and ideally we stay above recent October resistance at 21 pence in the meantime. Onto a stock which picked out last week and looked as though it was a slightly, let's say, ambitious, but we've hit our first target there, 0.14. Well, above 0.4 we were looking for, or we are looking for, as high as 0.24 by the end of next month. Bear trap gap reversal, in fact it's a bear trap island reversal with a gap down back in September and a gap higher for November, one of the strongest signals around, and also a bullish divergence line there as well. So the charting worked nicely. Interesting news regarding funding from Phoenix Copper today, where we seem to be in the run-up to something exciting next month. Here we've hit our initial target there at 25 pence, above that looking for 35 pence by the end of next month, and the way things are going, even by the end of this month. So well done to Phoenix. RUA is a stock I covered at the beginning of last week, and here we've hit the, nearly hit the target there, just missed it actually. 24 pence, top of a broadening triangle. We already had an unfilled gap to the upside, so it was a bear trap gap reversal, one of our more reliable signals, or probably the most reliable signal, and then the sideways shuffle above a rising 50-day moving average. So hopefully we'll get that target at 24 pence. Next target up would be the line I'm drawing at the moment, which could be as high as 40 pence, which is a June resistance line projection. So above 24, looking for 40 on RUA. On to Verici, and here a bear trap. It's an bear trap island reversal, so a new low there, gapping down, then gapping up. And we're in a bull flag now, so hopefully we above the 8.5 pence area, looking for up to 19 or 20 pence at the top of that wide rising trend channel from back in March. Only back below the 50-day line at 7.75, really delaying the upside scenario there. Finishing off with a decent move here on a stock which I've covered quite frequently of late, Wildcat Petroleum. Here we've got bullish divergence and just trying to break neckline resistance. The initial target here up to 0.18, and then after that the old support area in the 50-day line, 0.24, hopefully by the end of next month, and if we're really lucky by the end of this month. But the initial target here, 0.18, which was the old October peak. Upside value while we hold above recent 0.12 support, obviously. That's it for me today. More updates tomorrow.